Okay, perfect. So yes, so let me just go through. We'll have as a starting point. So just a brief overview really of what today's session will involve. So I'll have a brief introduction to myself and Avonmead Accountants as an accountancy practice, and then we'll go through some different points really. So we'll have a look at what it takes to ensure that you're being compliant, and that will vary in terms of the way different people are set up. We'll then have a look at the benefits of using software, in specific accounting software, see how that can help you in many different ways actually. We can then have a look at what kind of expenses you can claim, how you can look at structuring your income, and then finally how Avonmead Accountants as a firm could help you in order to achieve that. So as a starting point, so who we are. So Avonmead Accountants, so we were established about 18 months ago here in Birmingham, and about 12 months before that in Bristol. So we've got offices in both locations. The vast majority of services that we deliver are cloud-based. So the fact that we're based here in Birmingham or in Bristol doesn't actually make a difference, because we can reach a wide audience still due to the type of services that we deliver. We provide a full range of services. That's everything from very simple kind of bookkeeping services through to year-end tax planning for businesses and for individuals as well. So yeah, I guess I won't bore you in terms of ourselves. Let's move on to the first point. So being compliant. So I think initially as a starting point, there's a couple of things to consider, and I guess that's the way that you're set up and the way that you're operating as an entrepreneur. So firstly, I imagine the vast majority of people will have an idea and have a business, and there will be an individual, there'll be a sole trader. So the importance for that person is obviously to keep to maintain records. So keep a record of any expenses that relate to that business. So anything that you're spending that relates to that business, you need to be keeping a record of. Obviously, if you receive income in relation to this business idea or the business that you're operating, in excess of £1,000 per tax year. So the tax year runs from the 6th of April to the 5th of April the following year. So if you receive income in excess of £1,000 for that tax year, then you'll be required to register for self-assessment and complete that self-assessment tax return. Obviously, when it comes to completing that, that's why it's so important that you are keeping records and those records are accurate. And I guess we'll go on to how the best ways of maintaining those records shortly. But obviously, what you wouldn't want to be is in a position where you're either under declaring your income or or the expenses that you could claim against that income because the record keeping is poor or hasn't been maintained throughout the year. Looking further on, and again, this will differ per different people's scenarios. So for some people, it may be beneficial for you to trade as an individual, as a sole trader. Other people, I guess they may be at the stage where they're already incorporated as a limited company, or it may be something they're considering doing. So I guess that'd be useful as a starting point, those kind of discussions to have in terms of which one's going to be beneficial for you. But if you are to register as a limited company, I guess there's a few more responsibilities, let's say, that come with that. So whilst there may be some benefits, especially in terms of the kind of income that you can take when operating through a limited company, the responsibilities are increased as well. So I guess it's just about weighing that up as well. So the first point is, again, just record keeping. So the bookkeeping that needs to be done for the business. There's a requirement, obviously, with HMRC to maintain those records as well. So that is part of being compliant. I think that's the first step, really, to make sure that you are being compliant, is to keep those good records. In terms of VAT, so you'll be required to register for VAT if your taxable turnover in a 12-month period is greater than £85,000. So again, you can register voluntarily. So I think that's, again, just another discussion that you may want to have with an accountant or a tax advisor to kind of understand whether it's going to be beneficial for you, perhaps even before you get to that £85,000 threshold. If not, as soon as you do get to that £85,000 threshold. It is a requirement for you to register. There isn't a choice behind that. So once you are registered, you've got a limited company, you have to submit annual accounts to Companies House each year. And that annual accounts date will initially be based 12 months after your date of incorporation. You can move that date if you needed to. But again, that's something that generally most people will look to an accountant to prepare a set of annual accounts, and then following that, the corporation tax, which is linked to those annual accounts as well. The corporation tax will be a case of reporting the profits that the business has made. In some cases, a loss. If there has been profits, then you are to be liable to pay corporation tax liability on those profits. If the business is loss-making, then the losses will be carried forward and can be offset against future profits as well. The confirmation statement is a case of reporting to Companies House the general information behind the business, so kind of things like who are shareholders in the business, where are the records of the business held, and so where the registered office is, etc. And again, that's a requirement to be submitted to Companies House each year. So those things on a high level, so the accounts, corporation tax, the confirmation statement, they're things that I guess people may not consider need to be done when incorporating a limited company. I think a lot of people may just dive straight in and incorporate that company and not realise that there are these requirements that need to be completed. And along with that, obviously, if those requirements aren't met, then there are penalties and fines that will be applied by both Companies House and HMRC. So it's definitely something to be on the radar when either setting up or considering setting up a limited company. And the final point on that is payroll. So obviously PAYE. So if you're paying any employees, obviously you need to be running a payroll scheme. They need to be run through a PAYE scheme to obviously make sure that you're paying HMRC the right amount of tax and national insurance on the salary that you're paying to the employees. And also pensions is a point to consider as well. So auto enrolment was brought in not long ago, and there's a requirement depending on the level of income that those employees are receiving to have to auto enroll those individuals into a pension scheme. So that's definitely something to be on the radar as well, to ensure that you're being compliant with. So on a very high level, that's they're the kind of points that people should be considering, either whether they're trading as a sole trader or trading as a limited company, need to be considering as a starting point. The next point is the benefits of using software. So in the last slide, we mentioned about record keeping and keeping those records. And I guess the first question on is, so why is software important? So I think as a starting point, there's I guess there's several reasons really why software would be important. Maintaining those records is the main point. It allows you to maintain those records electronically, which is an acceptable way now for HMRC for you to be maintaining records. So in theory, you could be paperless, which I guess is a bonus for everybody. You don't have to have those storing costs. There's no loads of paper hanging around, which obviously is easy to misplace and difficult to kind of bring together as well. When you need it, it's not so easy to kind of locate certain expenses or certain invoices when you need them. I think the next point is automation really. So on this slide, I've included a couple of points. I think these are the main kind of softwares that we use. Some of you may have heard of them, some of you may have not. So Xero is a cloud accounting software. So Xero allows you to record all of your accounting entries in a cloud platform. I guess the bonuses of that is it gives you remote access to your finances. So they've got a mobile app. Obviously, if you've got a laptop, you can always access your finances, which I guess is a massive bonus for people. I think when it comes to record keeping, I think it's, I guess, the easiest thing. If you are updating a spreadsheet all the time, you've got paper. I think the easy thing is people may leave it to the end of a month, the end of a quarter, or even the end of a year to try and pull all that information together. Whereas something like Xero allows you to do that on a live basis. So you could be doing that every day, going into and obviously maintaining that as well. It also means you can run relevant reports to allow you to make valuable business decisions as well. Other kind of functionalities it has a bank feed set up in there. So If you've got a business bank account set up, it will pull all your transactions through into the business bank. So everything will already be in zero. So when it comes to actually completing the bookkeeping, you'll be able to see all the bank transactions, and that will be the basis for you to complete that bookkeeping, whether that's yourself doing it or whether you employ an accountant to complete that for you. You can also create customizable sales invoices. So I guess the other options, people may create sales invoices on Word or Excel, which I guess it can be quite user friendly. Sorry, the opposite to user friendly, really. So they're quite manual to maintain, whereas something like Xero, you can even create recurring invoices. You can have those sent out to your customers automatically as well. So I guess it's about automating this process to make take as much time away from you as possible that you'd be spending on stuff like bookkeeping and record keeping, and allow you to be spending that time on focusing on the business instead. The other software we've got on here is Receipt Bank. So Receipt Bank is a tool which instantly captures the information from receipts. So if you had an expense, you've got an invoice, all you have to do is upload it into Receipt Bank, and what it does, it picks up the information on the face of that invoice or receipt. It allows you to categorize it and publish it directly through into Xero, so that those are connected together. Obviously, what that avoids is having to manually create the receipts. Also, that will store the receipts and purchase invoices in an archive, and that's actually an acceptable way with HMRC to keep electronic records as well. So again, that just links into the fact of being paperless and not having all of that paper lying around as well. In terms of the type of expenses that you can claim, so I think the line we've got on here is actually a line from HMRC, but I think it's definitely one that should be considered anytime you're looking at business expenses. So a lot of the time we'll have clients will ask us, what can I claim this expense? There's the varying types of expenses that the people ask whether they can claim. The phrase that HMRC uses, wholly, exclusively, and necessary for the business. So if there's a personal element or it's not wholly used for the business, then generally it can't be claimed as a business expense. So I think that's definitely the main line to take away in terms of considering whether an expense is an acceptable business expense or not. Different types of expenses. So you've got stuff like travel costs. So again, business related travel costs. So whether you're traveling to meetings, whether you're traveling to suppliers or customers, those kind of expenses. And again, whether that was using public transport. If it's using something like a personal vehicle, then you just need to obviously consider the type of expense that you're claiming. So you can't actually claim for something like a fuel cost. It's difficult to measure something like fuel directly, because say, for example, if you put £20 worth of fuel in your car, it's difficult to measure how much of that fuel you've actually used on the business journey and how much of it you will then go on to use personally as well. So something like mileage, you actually claim at a flat rate of 45 pence a mile up to 10,000 miles. It's 25 pence after that. So there's definitely still something that you can claim if you are using your personal vehicle to use for business travel still. But I think it's just about considering that at the point in time. So stuff like cost of goods, so they're expenses that you incur that are directly relating to the sales that you're making. So a simple basis, if you were making a product, all the materials that you're using to make that product, that's the cost of buying those. Insurances, so they're business insurances, so insurances that are taken out in the business name that obviously protect the business. And then very simple things, so like bank charges, advertising for the business, and any accountancy fees that relate to the business. Training for staff, so again, as long as it's use that phrase, wholly, exclusively, and necessary for the business. So if you had a business that built aeroplanes, if your training was aviation related, that's fine. If the training was relating to knitting, then it's not business related, so that expense couldn't go through the business. So again, wholly, exclusively, and necessary for the business. So as long as there's a benefit to the business, that expense can be claimed. A business phone, so again, I think that's quite a topical one. I guess it's difficult to, many people say, how can you determine whether people are making business calls or personal calls? I think nowadays, obviously, you have a contract which has generally unlimited minutes on, so it's difficult to kind of split that. So HMRC will allow you to include a business phone as a business expense, providing that it is being used for the business. And you finally, use of home. So again, particularly topical as many people are working from home at the moment due to the current environment. So I think that's the main one that obviously people generally will miss out on. So the use of home expense, so people can claim a flat rate expense against the costs of obviously stuff like heating and electric that they use in their personal home. So whether if you're an individual, so a sole trader, you can claim a flat rate based on the amount of hours that you're spending working from home, and that amount differs based on the amount of hours. And if you are an employee and you're claiming, so if you're a director of a business, you can claim that cost for the business as an employee, and that's at a flat rate, which is currently £4 an hour. It has increased to £6 an hour. So I think that's definitely something for people to consider when obviously either when doing a self-assessment or when doing the year-end accounts, is obviously to make sure that if you have that use of home element, the use of private residence for business purposes, that expense is being claimed. And finally, I think the main point on there is if you're insured, just ask. The worst thing to do is just start putting expenses for the business when you aren't particularly sure. All that will happen is if there was ever an inspection from HMRC and they asked you about the expenses, if it wasn't justifiable, then the first thing they do is obviously disallow that expense, but you would be liable to potential fines and penalties as well for including that those expenses in the first place. So it's definitely just worthwhile asking the question, just have a bit of reassurance when including any expenses that you would be unsure of. The next point is about structuring income. So I guess everyone's main aim when structuring income is to ensure you're as tax efficient as possible. This will depend on each individual circumstances, so there isn't a one size fits all answer here in terms of structuring income. Although there are different kind of questions that you should be asking. It does depend whether you are a sole trader or whether you've got a limited company. One of the benefits of having a limited company is that it gives you a lot more flexibility in terms of the way that you can structure income, and does allow you to be potentially be more tax efficient as well. So I guess that's one of the main benefits of having a limited company. As a sole trader, quite a simple basis, the business that you're running will have income and will have expenses, and you'll arrive at a profit, and that's the amount that you'll get taxed on. So it's quite simple as a sole trader. As I say, there isn't a massive amount of flexibility you have in terms of the way that income is structured and how tax efficient you can be. When you have a limited company, then there is a lot more that you can look at. So I think some of the points that we've got on here, so startup costs. So say if you had a limited company and you initially pay funds into the business, you may be paying for, it may be a loan that you give to the business. It may be that you're paying for business expenses personally to get that business off the ground. All of these funds will build up a loan balance in the business. And as a director of the business, those funds will then be due back to yourself. I think the main thing, important thing with that is obviously going back to the record keeping. Whenever you start doing anything like this, is just to make sure that you've got this on record so that you're maximising these kind of expenses that are due for reimbursement. And reimbursing those costs, there isn't any tax implication to it. So it's a loan as a director to the business, and there's no tax implication of reimbursing that. So it will be tax free to have those funds back from the business. So that's definitely something to consider, I guess. For people, there's no point in taking a massive salary when you've got this big loan account which is still sat there. You could be drawing funds tax-free rather than having to pay income tax on those. The point on salary and dividends. So dividends are a distribution of profits from a limited company. So at the end of the year, you'll look at the business, and if there's profits available in the business, then those funds can be distributed to the shareholders in the business in the form of dividends. So when looking at a salary on a very high level, for an individual who didn't have any other income apart from their own limited company, it'd be beneficial for them to take a minimum salary. So when I say that, I mean a salary to avoid paying tax and national insurance. It still qualifies you for the pension stamp, but it means you incur no tax and national insurance on that salary. The remainder of your income to be topped up in the form of dividends. That'd be the most tax efficient way. Those dividends within the basic rate tax band are taxed at 7.5%, which is much more tax efficient than salary, which, for example, is taxed at 20% in the basic rate tax band. So obviously you can see the benefit of just structuring that slightly differently and paying a much more favourable tax rate as well. But as I say, I think the main thing with that is that it's different for every person. Obviously, everybody has different circumstances and everybody receives different streams of personal income as well. And the other point on there is pensions. So it may be that you've kind of maximised the funds that you need as an individual, but it may be that you look at something like pension. So I guess that's income for a future day. And the benefit with that is that you will receive, again, this is if you've got a limited company, by putting a pension through that limited company, you would actually receive tax relief on it. So you receive corporation tax relief. So you would save 19% corporation tax on any pension contributions that you made through the business. So whilst you may have maximised or got to the point of where you've received enough salary and dividends in terms of living costs, so you're happy with the amount that you've received, but it may be a case that there's still profits in the business, and we may look at whether you contribute to a pension to start bringing that corporation tax liability down then. One of the points on there is about partners' income. So it's important obviously to consider your own income, but at the same time, if you've got a limited company, it's also worthwhile considering the income of your partner as well. So if, for example, they didn't work or they were a low earner, they may have tax reliefs that are available to them, which they're not currently utilising. So, for example, if they were in receipt of no dividends at all, it may be worthwhile setting them up as a shareholder in the business. Everyone gets a £2,000 tax-free dividend amount. So if they didn't have any dividends, it'd be worth setting them up as a shareholder, setting up different share classes so that they can draw different amounts of dividends, and just having that £2,000 worth of dividends, paying no tax on them every year. Obviously, in terms of the household income, it's £2,000 more than it would have been, and the other business owner wouldn't actually pay. Obviously, if they were to take that £2,000, they'd pay tax on it. So just different ways of looking at the situation as a whole, really, to maximise the income that's coming out of the business. And the last point on there is company cars. So generally, especially nowadays as well, with CO2 emissions and kind of a bit more of a firmer stance on stuff like diesel vehicles, they're generally not tax efficient to put through a limited company. However, an electric vehicle is extremely tax efficient to put for a limited company. This year, for example, on a fully electric vehicle, the benefit in kind, so the tax you'd pay on a company car that was fully electric would be nil, so 0%. So again, I think it's a point of looking at each individual circumstances, looking at the level of salary and dividends that they're taking, and if there's any further funds they want to take from the business, then looking at something like a company car, are they actually paying for that personally themselves? Could they put it through the business? Is there a tax advantage of that? So these are all things that are worthwhile looking at. Again, worthwhile having these discussions with somebody like an accountant to allow you to make informed decisions as well. In terms of how we can support you to do that, so again, just some high level points. So what we provide are dedicated accountants. So each of our clients will have their own allocated accountant. We talked about cloud accounting software, so something like Xero. So if you've never used that before, or if you use a different software and you wanted to move to that, then obviously we can assist with that transition. Appreciate some of the softwares can be quite daunting for the first time people have used them as well. So we provide some training on those softwares. To obviously get your people comfortable with the functionalities, and obviously to make sure they're getting the most out of those softwares as well. Management accounting information. So I guess this would be more for established businesses who may want to try and understand a bit more what kind of information and what their finances look like, maybe building some KPIs to try and allow them to make some more informed business decisions as well. And the final point there is tax planning meetings. So whether that's for an individual, so whether that's discussing an individual basis or a business basis, often the two tie in closely together when it's a single director-owned business. To have those kind of discussions, to look at each individual circumstances to ensure that both the business and the individual is operating the most tax efficient way as possible. In terms of services that we offer, so our general core services range from bookkeeping through to VAT compliance, annual accounts, corporation tax, payroll, self-assessments, and also access to that cloud accounting software as well. We also offer additional service such as forecasts, virtual CFOs, and some tax advisory as well. In terms of the next steps, if anybody's got any questions on what's been discussed, I appreciate that some people might have some questions that are kind of unique to themselves and perhaps don't want to discuss widely. So obviously I've included my contact details on this final slide. So if anybody wants to reach out to me directly, then more than happy for you to do so. We also offer an initial 30-minute consultation, which people may want to take advantage of, which is free of charge. I guess the nice last piece on there is obviously if anybody refers us to a client, then we also offer a referral reward as well for that. But yeah, I'll also leave that open. And Dan, I don't know if you wanted to have a brief discussion now, but if anyone's got any questions, I'm obviously open to answering some.
Yeah, sure. If anybody's got any questions, Alex looks primed and ready.
Primed. He's going to always put me first, isn't he? But
let's start with Alex. If anybody else has got anything lined up, just let me know in the chat, and then you can either ask the question or you can type it in the chat, whatever you feel comfortable with. Alex, do you want to start us off?
So yeah, by all means. So in addition to working on Beck, my main business basically helps early stage companies raise equity funding between seed and Series A. So I suppose the question is, where we sit, we're non-FCA regulated because we're more on the matching and the communication side, and that's where our insurance sits. But we've had this problem before with accountants in terms of accountants understanding the fact that we are not FCA regulated, but worried that we may be in the future, which is a possibility, but that's not where we sit for the time being. So I suppose the question is really, how do you interpret as Avonmead clients that may fall into that category? Do you get involved on that side? And if not, I suppose, how do you draw the line?
Yeah, so I guess we're similar in the fact that we're also not FCA regulated, so we're not financial advisors. We can advise from an accounting perspective. So in terms of tax efficiencies, we can give people the information that they need to be able to make a decision in terms of being tax efficient and in terms of what expenses they can be claiming, etc. But we wouldn't go out and specifically advise on amounts. So for example, on income, we wouldn't sit down and have a discussion with people about how much income they should be looking at trying to draw and how much they should be contributing to a pension, etc. I think that falls within the remit of a financial advisor.
From the point of taking on new clients as Avonmead, for example, us in that sense, do you have an issue with someone being FCA regulated as a client in that respect, or?
I don't believe so, no.
No. Okay, so that's important. Okay, thank you.
Awesome. Cheers, Alex. Anybody else got any questions?
Hello, can I please ask a question?
Sure.
Sweet. Yeah. Oh, thank you so much, James. That's very helpful. So I'll just jump into the question, right? So a question, obviously, from myself. So I'm in a position of thinking about starting up the business. So the question is relating to those who are not UK residents, like as in non-UK resident, in terms of running a business or owning a business here in the UK, and then any differences or any specific type of situations that we need to consider in terms of tax.
Yeah, so yes, a good question. I mean, in terms of actually running the business, setting up a business, etc. My understanding, as long as you've got an actual UK address and a national insurance number as well, then I believe you are applicable to set up a business and run the business itself. In terms of complexity regarding tax residence and tax status, etc., that will be I guess that'd be more applicable to yourself as an individual. Again, it will depend on individuals' circumstances. So if that was something that you wanted to have a discussion about in more detail, obviously we'd be open to having that discussion. But in terms of the actual business itself, there isn't an impact on the business. The business will be registered in the UK. It'll be a UK company. So the fact that the director or directors of that company weren't UK residents for tax purposes obviously isn't an issue. It's just an issue for, or not an issue, it's just a complexity around the individual's tax state. So obviously when you come to complete a self-assessment.
Right. Yeah, look, I mean, that's totally right. So, I mean, I've got, a few other people that, in a similar situation with me. So in terms of like, this sort of, complexity between, like you're setting up your business in your own country and then, setting up your business here in the UK. So, I'd like to maybe, have a quick, maybe 30-minute chat, with you guys.
Sure. Yeah, well, if you just want to, my contact details should be on the screen still. So feel free to drop me an email. We can arrange to have a call.
Good, thanks.
Okay. Any other questions?
Do you find people register too early for VAT without really understanding it?
Yeah, I think, or vice versa. Some people that perhaps should register don't. I think the important thing in terms of VAT, obviously you don't have to register until you get to the 85,000.
You know that you're going to be able to get to that in the first place. Yeah.
Exactly. Yeah, it's the estimated turnover for a 12-month period. And how that 85,000.
And how do you interpret exemptions? Because, for example, what we're doing, as far as I know best to our knowledge, we are exempt in that respect in terms of facilitating as an intermediary. So do you have resource on the inside, or do you outsource, or how does that work?
Yeah, so I guess as a starting point, we'd have a discussion with the client to determine what kind of sales they're making. We then go away and have a look at it in detail and then advise the client whether we believe they're taxable or non-taxable in terms of VAT. With the £85,000 threshold, that is just taxable turnover. So say, for example, if all of those sales were exempt or outside of the scope, then you wouldn't have to register for VAT. But yeah, I mean, going back to initial question, I think what people don't realise as well is that when you register for VAT, you can actually backdate your claims on the expenditure. So you can claim back 4 years for goods that you've purchased that are still either within the business at that point, the point that you're VAT registered from, or that you've actually used to kind of build or make a product.
You're going to get a bit more technical when you're actually looking at the differences of services provided and where it
works. So I guess what you get is a situation where some people, what your question about whether some people register too early, some people might register, say from the 1st of January, because they might be like, oh, well, we want to claim all of those expenses. Whereas they may have actually been able to register, in April time and just backdate those because they meet the criteria of being able to reclaim pre-registration expenses. So I think it's just about having that kind of thought process. Some people don't consider that, I guess, and all that happens then is you would have paid VAT on your sales from January to April when you wouldn't have necessarily needed to.
Yeah, no, absolutely. I think Dan's asked me to take over.
Okay.
Troy, to your point of setting up in the UK, through Beck, working with Dan and Omran on this, I think that a lot of the tests are, at the end of the day, you can be overseas, but as long as you're able to prove that a substantial amount of your activities are in the UK, or two, that you've got an agent that is acting on your behalf in that respect, usually that's fine. We've had that with our cohort who have not been based in the UK or even in the EU. In that respect, it's obviously easier if you've got residency there, but yeah, those rules are changing. So,
Right. Look, I mean, the current situation is a bit weird, at the moment, and then, taking all of these stuff.
No, absolutely.
Look, I mean, my situation is right. Look, I mean, it's a SaaS business, right? It's a purely online, just a like a subscription based software, like a web app type of thing. That we have multiple web apps and stuff like that. So it's really simple. I mean, it doesn't require me to like, stay here in the UK or like.
No, it's more when you actually, do you want to apply?
Location.
It's more if you want, it's useful if you want to apply for grant schemes, if you need it for funding reasons. I'm part of an accelerator in Latin America at the moment.
Exactly.
If you're trying to raise public funding over there, you have to have a base over there. So it really depends on the jurisdiction in that respect of what purpose you want to benefit from by having one there. So it goes beyond that.
Yeah, look, I mean, my employees and stuff like that, they'll be, obviously based in, I got a good a team in Poland, so like to hire people there. But in terms of running the business and stuff like that, I'll be here in the UK. And look, I mean, I've been living here for I wouldn't say a while, but like a bit. So still just not very clear on this type of thing. And I've spoken to a lot of accountants and stuff like that. Some of them, they don't really deal with these type of situations. So I like to really find a good accountant to help.
And James, I suppose actually a quick follow-up question from that. Do you find a lot of those complications can, for example, come from if someone has a subsidiary overseas? So for example, if someone's got a base in the US and there's two lots of tax laws under the SEC and things like that, do you find that your clients comes up with a load of complications generally, or people rush in that respect?
Yeah, I think the important thing in those circumstances is that people are getting advice in every country where they're based. I think obviously what we get a lot of the time is someone will say to us, well, I've got X amount of sales in the US. I guess the important thing at that point is that we can obviously assess it from a UK VAT perspective, but from a US VAT perspective, obviously we don't advise on US VAT. We're not the US VAT expert. So I guess at that point we'd advise for them to kind of seek advice in that country as well, just to make sure that they're being compliant in all of those.
Then where's your principal activities coming from, as opposed to?
Because every country is different as well. So obviously our VAT rates and thresholds, etc., are based on UK VAT rules, whereas like in the US, for example, their rules be completely different. So it's important that
something here that's zero rated won't be zero rated over there.
Exactly. Yeah.
Cool. All right.
Look, I mean, if I may I jump in here. So look, for people like us, right, online business purely, right, the subscription-based model, think of Zoom, what we're using right now, it's like this, yeah? I mean, maybe the company is based in US, but, revenue coming from all over the world, basically. So how do you like define that and, do tax around it?
Think of it as tax efficiency, right? That's why a load, your Googles, your Apples of the world are going to be based in Ireland. So again, different system. So
we actually go there now.
Any other questions?
It's ensuing into a conversation now.
Anybody else got any questions? Any comments? Just give a sec. As I said, if anybody doesn't feel comfortable unmuting and saying it, you can always pop a question in the chat. Obviously, James's contact is on screen as well, so you can always shoot James a message. From me, I guess the question I'd ask, when you're working with startups, what do you think is the biggest mistake you see people make that they could easily put right?
I would say that record keeping point. I think it's the foundation of everything that you'll do, whether you do it as a sole trader and you come to do your self-assessment at some point, or whether it's whether you incorporate as a limited company. I think that record keeping point. I think what we get quite often is someone will come to us and say, right, well, I've got a limited company, I've been trading for 12 months. And we'll ask the question, so what kind of accounting systems or what accounting have you done for the last 12 months? And the answer is nothing. So then all they do is end up going back over the last 12 months and trying to remember what they've spent, remember where it was spent from. And I think all you do is get in a position where you end up probably missing expenses that you could have claimed, which could be reducing those profits, or just not being done very accurately. So I think the main thing is just have a bit of a plan in place. So when you come to incorporate that limited company, just have these kind of things on your radar and just be having to think about how you are going to maintain those records and even things like that. So just have a think about it and think, well, the threshold's £85,000. Even if that's in year 2 or year 3, when am I likely to meet that threshold? And just trying to be having those conversations at an early stage. There's certain stuff that won't be applicable, at least for the time being. but just to try and have those things at least on the radar.
That's yeah, I think super important. And I think from our own practices, just doing kind of little bits often, so jumping onto zero, making sure we're keeping it up to date, means it's not a huge burden all at once to do 100 things. Awesome.
Exactly. And using the software makes it easy. I mean, some people are fairly comfortable in just doing it on something like Excel. Obviously, the Excel isn't an accounting software, so the amount of functionality that you'll be able to get out of it, the time that you may spend inputting stuff into it, and especially if you start to scale up, something like Excel just isn't scalable. So I guess it's important to have those kind of processes and systems in place at an earlier stage as possible.
Awesome. Yeah, I think that's super important. Anybody else? Anything? Or can we let James go? Again, if there is anything that comes into your mind after the session, contact details are on there. Obviously, you can get in touch with James, you can get in touch with us, and we're happy to pass you on to these guys. But no, essentially, if there's no more questions, then that is it. Thanks once again for joining us. Back in a fortnight, we've got an event exploring Latin American entrepreneurship with a few of our entrepreneurs from Latin America.
I should say Central America. Like, that's different.
Central America, but they're all over.
Well, Costa Rica and Venezuela is more central, but yeah.
We've got Costa Rica, Venezuela, Mexico, Guatemala, and Brazil in attendance. So that would be super exciting. You can access that on the Eventbrite, so the same place as signed up on this link. But that is it. Thank you very much, and we'll look forward to seeing you guys again soon.
Thanks a lot, James.
Yeah.